So far into 2024, Tesla's stock price fell about 25%. Let's see what happened in its 2023 Q4 earnings. First of all, in 2023, Tesla excelled in production with 1.8 million vehicles delivered to customers. This was in line with company guidance, and the fourth quarter volume hinted at an annualized run rate of nearly 2 million cars in 2024. Also, Tesla's Model Y achieved a global best-selling status, surpassing 1.2 million units delivered, and becoming the top-selling vehicle worldwide regardless of electric or traditional. Despite substantial spending on future projects, Tesla maintained robust financial health, reporting a strong cash flow of $4.4 billion in 2023, covering record capital expenditures and R&D investments. One result of R&D is the full self-driving capabilities. The management stated that Tesla FSD saw a transformative upgrade with recent release of version 12, featuring a complete architectural rewrite based on end-to-end AI. This update, currently available to employees and select customers only, is set to roll out to all US customers who request it, encompassing over 400,000 vehicles in North America. This update is groundbreaking, utilizing AI not only for object perception, but also for critical tasks like path planning and vehicle controls. Tesla asserts itself as likely the most efficient company globally for AI inference, due to the necessity of optimizing hardware. On a closing note, despite challenges such as high interest rate environment, Tesla claimed that it had a remarkable year in 2023, achieving record production and maintaining strong free cash flow. Looking forward, Tesla envisions a challenging yet plausible path to potentially becoming the most valuable company globally, a possibility that was previously not considered. Musk emphasized the company's commitment to ambitious projects and acknowledged the difficulty in execution, but he saw the challenging times as part of the range of possible outcomes. Now, let's see Tesla's Q4 financial performance, starting with its operating metrics. From the vehicles segment, Tesla produced a total of 494,000 vehicles in Q4, up 14% year-over-year. After its scheduled global factory shutdown in Q3, Tesla's global production reached a record annualized run rate of 1.85 million vehicles last year, which is up 35% year-over-year. And in 2023 overall, the total vehicles delivered was up 38% from the year before. Now on to Tesla's energy business, which represents 6% of total revenue. Energy storage deployment was 14.7 gigawatt hours in 2023, which is a 125% compared to the year before. Continued growth on a TTM basis is expected as Tesla continues to ramp up its 40 gigawatt hour megafactory in Lathrop, California, towards full capacity. Solar deployments declined sequentially to 41 megawatts and yearly to 223 megawatts, a 26% decrease year-over-year. This lower solar demand was mainly due to higher interest rates. As a result, this segment's profitability in Q4 was negatively impacted. Lastly, the services and other businesses achieved record revenue and gross profit. The biggest drivers of profit in 2023 were part sales, used vehicle sales, merchandise sales, and pay-per-use supercharging. As Tesla's fleet continues to expand in coming years, there is an opportunity for these fleet-related services to become a more meaningful driver of profit generation. As a result of these operating results, Tesla's total revenue for Q4 was $25.2 billion, up just 3% year-over-year. That's because the automotives, which is the largest revenue contributor, had just 1% growth. Energy generation and storage revenue was $1.4 billion, up 10% year-over-year. And services and other revenues were $2.2 billion, growing rapidly at 27% year-over-year. Moving on to expenses, the R&D was $1.1 billion, up 35% year-over-year, and SG&A expenses were $1.3 billion, up 24%. So overall, Tesla's revenue lagged its underlying operating results, while expenses grew at a faster pace. And this combination lowered the operating income. In Q4, Tesla had an operating income of just $2.1 billion, down almost 50% from $3.9 a year ago. Although the profit was disappointing, Tesla's cash flow showed better numbers. First, its operating cash flow was $4.4 billion, up 33% year-over-year. And despite the record high capex of $2.3 billion, which rose 24% year-over-year, Tesla's overall free cash flow was $2.1 billion, up 45% year-over-year. And in the end, Tesla sat on $29.1 billion of cash and equivalents, which is up 31% from last year. This increase in cash pile is quite amazing, and I will explain its implication in another Tesla video. Now, let's cover the most helpful parts of the Q&A session. The first part was about the scale and timing of production increases, which is important because the key factor that's restraining Tesla's growth at the moment is its production constraint. Musk said that although Tesla is working hard to increase production, there will be periods when Tesla won't grow at the same rate as before. For instance, Tesla's volume growth will be lower in 2024 because of the focus on launching the next generation vehicles. Tesla is currently between two major growth waves. The first one began with the global expansion of Model 3 and Y, and the next one will be initiated with the next generation platform. Musk asserted that the next-gen vehicle production will begin towards the second half of 2025. Although there is difficulty in predicting the S-curve of manufacturing growth, there will be a slow start followed by exponential growth. The ramp-up will be a challenge, but Musk showed confidence that once operational, the revolutionary manufacturing technology at Giga Texas would surpass any others globally. Moving on to the Cybertruck. Tesla's Cybertruck production ramp is on track, with a surplus of finished 4680 battery cells, a key component. This battery cell features breakthrough technologies with emphasis on manufacturing techniques. For example, in Q4, the Texas facility successfully transitioned from Model Y cell design to Cybertruck design, resulting in a 10% increase in cell energy. And Musk clarified that Tesla doesn't intend to replace its suppliers, but aims to supplement them, which include Panasonic, CATL, LG, and interestingly, its Chinese competitor BYD. While production increase is key, Musk also emphasized cost reduction, while increasing production at the same time. He claimed the cost reduction efforts is an ongoing and meticulous exercise, which is a game of pennies. Optimization measures include using returnable packaging, optimizing truck routes, negotiating better pricing with shipping, and embracing more efficient practices as a company grows. For example, inbound logistics costs have decreased by 22% year-over-year. However, precise predictions about cost reduction are challenging due to various factors like interest rates and commodity markets. The second part of Q&A was about future growth drivers of Tesla. For example, regarding Cybertruck orders, Musk noted the encouraging conversion rate from reservations to actual orders. The trend suggests that if it continues, all builds for 2024 Cybertruck could soon be sold out. Also, the situation is production constrained, not demand constrained, and Tesla could raise prices significantly, but does not want to gouge people for early delivery. Regarding Optimus, the humanoid robot, Musk said Optimus is a revolutionary and very new product with potential to far exceed the combined value of everything else Tesla produces. And then he discussed some details about the robot. First, Optimus shares technology with Tesla cars, running the same AI inference computer and training technology, allowing improvements in both areas simultaneously. Second, a key challenge lies in enhancing its overall utility, especially for mass production. And third, it is already capable of moderately specialized tasks, but the goal is to be a smart robot capable of performing generalized tasks in human environment. But there is great uncertainty associated with being in uncharted territory. This makes precise predictions impossible for Optimus. But regular public updates on Optimus' progress are planned, with Musk stating that the public will be informed every few months about advancements in its development. Musk added that he personally visits the Optimus lab until late at night. As an example of a challenge regarding Optimus, Musk talked about the safety of the Optimus, especially at scale. He emphasized the importance of making the robot impossible for any centralized control to upload malware. So Tesla is considering various safety measures, such as localizing shutoff mechanisms that cannot be updated from central server, emphasizing the need for extreme thoughts and consideration in this aspect. Lastly, regarding the timing of Optimus, Musk expressed optimism about the potential for shipping some robots in the coming year, but he also emphasized that it is a brand new product. He aims to change the perception of Tesla, emphasizing that the company should be seen as an AI robot company rather than just a car company. Moving on to the FSD, self-driving, Musk encouraged other car companies to request full self-driving licenses from Tesla, with tentative conversations already initiated. Despite skepticism for some companies, Musk anticipates the reality of FSD becoming apparent within the year. In addition to Tesla's aggressive investments in NVIDIA chips for training, the Dojo supercomputer project continues. Dojo, deemed as a high-risk, high-payoff venture, is considered worthwhile despite its low possibility of success due to the potential substantial benefits it could bring. And there was also a question about Tesla's governance. Here, Musk expressed concern about potential challenges in maintaining control of Tesla as it becomes a powerful force in AI and robotics. And that is why he is asking for 25% of voting power. He cited the issue of shareholder advisory firms like ISS and Glass Lewis and expressed dissatisfaction with their influence over Tesla. He also clarified that he is not seeking additional economic benefits, but aims to effectively guide Tesla without being vulnerable to removal by external entities, while also acknowledging the need for checks on his influence in extreme scenarios, hence the 25%. Now in the last section, we summarized 3 news articles about Tesla. First, Tesla is recalling 200,000 Model S, X, and Y vehicles in the United States to fix rear viewing glitch caused by software malfunction. This recall comes less than 2 months after a previous recall by Tesla, where the company installed new safeguards in its autopilot advanced driver assistance system. So, despite Musk's ambition, or because of it, Tesla continues to face small glitches along the way. Next, Cybertruck is set to tour 8 major cities in China starting late January. While Cybertruck faces regulatory restrictions in China, the tour is seen as a strategic move to emphasize Tesla's position as a maker of advanced vehicles in the competitive Chinese EV market. And finally, Musk once left off BYD, the Chinese EV and battery manufacturer, as a threat in 2011. But now, BYD has dethroned Tesla in Q4 2023 as a top-selling EV manufacturer. The Chinese government's support for the EV sector, including subsidies and state support, significantly contributed to BYD's growth. And Musk acknowledged BYD's competitiveness in this earnings call, stating BYD's EVs are highly competitive these days. Okay, that's it for update on Tesla. There were a lot of hopes and optimism provided by Musk as usual, so it'll be interesting to see if he can actually deliver. And I will come back to you guys with other tech company earnings update pretty soon.